Good afternoon, colleagues. I'm excited to welcome you all in this public webinar on SDG Impact Standards. This event is jointly organized by UNDP Indonesia, SDG Impact at UNDP, and AVPN Indonesia. My name is Anissa, and I'm your MC for today's session. To give a brief outline of this event, the session will commence with opening remarks from our Deputy Resident Representative at UNDP Indonesia, Ibu Sujala Pant, which will be followed with remarks from AVPN Indonesia Country Director, Ibu Dini Indrawati, and we'll then start the session on introduction to the SDG Impact Standards delivered by Fabian Michaud, Director of SDG Impact at UNDP. Without further ado, I would like to give the floor to Ibu Sujala. Ibu, whenever you are ready, the floor is yours.
Thank you, Anissa. Can you hear me well? Okay, I'm unable to turn my video for some reason, if you can help me. It says the host has stopped it, so it seems to be centralized. Yeah.
Are you able to turn your video now, Ibu? Apologies for the inconvenience. Oh, yes, thank you, Ibu.
Yep.
Thank you.
Sorry. There we go. Wonderful. All right. Well, thank you very much, Anissa, and good afternoon, and a warm welcome to all our audience who is online today. First of all, let me welcome and acknowledge Country Director of AVPN Indonesia, Ibu Dini Indrawati, Director of SDG Impact, Fabian Michaud, distinguished guests, ladies and gentlemen, colleagues. It's a pleasure to welcome you all to this public webinar on an introduction of the SDG Impact Standards. As you may be aware, in recent years, UNDP has deepened its collaboration with the private sector to achieve 2030, the Agenda 2030. The private sector is really known and has a reputation for its flexibility, its agility, and financial savviness, as well as for its innovation. And this, coupled with an upward intake of sustainability principles, can really become a game changer to transform our economies to one that is based on lower emission levels and more green in nature. And therefore, as we see it, the private sector really is a critical partner in our development efforts towards a prosperous Indonesia and a prosperous world, of course. Now, you may ask, or at least we did, do businesses and development really go together? We believe it does. Integrating the SDG principles makes a strong business case. A study by Better Business, Better World in 2017 suggested that businesses who orient their operations to SDGs could create could create opportunities worth up to $12 trillion with an additional 380 million jobs created by 2030. Now, these are large numbers, especially when you speak in the context of development. And so given the competitive advantage, it is not surprising to learn that now compliance to environmental, social, and governance, what we call ESG standards, have become more and more fundamental part of fiduciary duties by investors. Ladies and gentlemen, as we know, recently the world has been ravaged by COVID-19 and its impacts, and the economic slowdown that emerged out of it has been amplified because of the war in Ukraine and its aftermath. And this has forced many governments throughout the world to reorient their limited public resources. And as a result, many social factors have actually taken a step back, and achieving the SDGs is somewhat looking more daunting than it did before. In Indonesia alone, prior to the pandemic, the financing gap to achieve the SDGs was estimated at approximately $1 trillion. And currently, new estimates are being calculated, so we can't give you updated figures yet. But if it was $1 trillion before, I assure you that number is very, very likely to go up, because we've seen a lot of reversal in SDG gains that were made in recent years. Now, one way to address the global SDG financing gap is by mobilizing just a fraction of global assets that are currently under management, utilizing just 7.76%, or about 6 trillion, which is less than the amount of transaction on any given day in the capital markets around the world, could make a huge difference. By mobilizing this type of private capital to address the SDGs financing gap, businesses will eventually reap a promising dividend of potentially higher levels of education, higher levels of positive social externalities, resulting in an increased well-being for a larger number of people, while also taking your company and your businesses to the next level. It may also offer longer-term sustainability to business operations, with less costs later spent on compensating for environmental damage, while also knowing that your work is contributing positively to the wider societal good. So where do we come in and how can we help? Well, in aligning your business with SDGs, UNDP is eager to step forward and become your partner to give your business development value added. So value added from the perspective of development, which at the same time doesn't hurt your bottom line and may even, in fact, enhance it in the long run, as I just alluded to. And I know my colleague Fabienne and the UNDP SDG Impact team have been hard at work to develop a methodology to translate these development needs into investment opportunities at the local level, and we'll hear more about them. Here, it's crucial, and I really want to emphasize that we may have all the best intentions in the world to integrate SDGs, to integrate ESG standards, but the ability to really translate that into practical, feasible options, I think, is really what's going to turn the table around. And that's what we're really hoping to achieve today. So from sourcing SDG investment pipeline to supporting enabling policy environment for SDG-oriented investments, our team continues to innovate and provide the most appropriate approach in aligning businesses with SDGs. And that's why the SDG Impact Standard, which we're going to be presenting and discussing today, is very relevant. The standards provide a way for investors to manage, evaluate, and validate their SDG enabling investments. And this standard is actually the first of its kind, as it responded to a market-led recognition that aims to move practices towards investments that integrate sustainability from the start. So it was very much a demand-led introduction of these standards, rather than us trying to convince the private sector and actors in that world to take this up. The SDG Impact Standard is part of UNDP's larger and integrated innovation to boost impact investment ecosystem in the region. And in the past years in Indonesia, we have partnered with Mandiri Capital Indonesia and the APEC Business Advisory Council to establish the Indonesia Impact Fund, where UNDP provides support in integrating impact considerations in business decision-making of the managed fund at strategic but also operational levels. For example, we've also facilitated the Impact Ventures Accelerator and Incubation Program, which focus on women and empowerment. As you are probably aware, leaving no one behind, inclusion is really a fundamental part of our value added and our value proposition. And we're ensuring that those get translated into the impact standards and the approaches that we will be talking about. So the program, this incubation program, provided mentorship on investment readiness to women and youth-led businesses. Over 50 women and hundreds of young people have actually benefited from this program. These numbers, of course, need to be scaled up to have the kind of impact that we're seeking, but it does create the momentum and provides the proofs of concept needed to show that it is possible to make changes in this regard. Likewise, another example is we've established the SDG investment map, which highlights the major intersections between development needs, policy goals, and investor interests at the national level. So where do they all converge and come together? The map informs the private sector on where capital could be directed, while the standards explain how to guarantee private sector contributions are authenticated. Our long-term and very trusted engagement with the government of Indonesia plays a very important role in solidifying our innovative approaches in financing the SDGs. We're honored to have supported the government to issue the Sovereign Green Sukuk and the SDG bond since 2018, which has raised more than $7.5 billion since then. So all of these really do add and contribute to this $1 trillion figure that I mentioned at the beginning. And this funding, this innovative sources have actually been used to finance and refinance government projects that positively benefit people and planet. But after all said and done, our endeavor will only be truly successful when we have your overwhelming support. We will need your cooperation in bridging the knowledge gap and moving organizations not only from SDG alignment, but also to SDG action. And from thinking away from SDG as an add-on and rather see it as a core part of your business model. We envision the standards to contribute its share, by helping businesses integrate, operate responsible and sustainable operations in doing so. Before I conclude, or rather in conclusion, let me take a moment to thank UNDP SDG Impact and the Asian Venture Philanthropy Network, whose representatives are here with us today. And we've been working this path together, working with the private sector in recent years, and we're very thankful for the extremely positive collaboration and cooperation we have with you. I'm looking forward to seeing this webinar unfold, and I hope you are too. I wish us all a knowledgeable and engaging and interesting session this afternoon. And please do engage, share your questions, ask your questions, so that in doing so, it's not just only us, sharing what we know, but we can really benefit from the real life and very context-specific experiences that each of you are bringing here today. Thank you so much. Terima kasih.
Thank you. Thank you very much, Ibu Sujela, for giving a concrete outline on the importance of aligning businesses with SDGs to scale out impacts. Now I'd like to call Ibu Dini to deliver her remarks. Ibu Dini, the floor is yours.
Thank you, Ibu Sujela Pan, Ibu Fabian, Ibu Devahuti, Pak Didi, and UNDP team. It's a great honor for me to deliver an opening remarks on the great occasions of the event today, the public launch of the UNDP's SDG Impact Standards. So, honorable guests, a very warm welcome to all of you. So, the rise of impact investment has accelerated over the past few years. So, the Sustainable Development Goals has acted as a compass for institutional investors on how to target investment capital for impact. So government around the world seeks to drive impact investing sectors with more effective policy outcomes and sustainable, inclusive economies. So as the largest network of social investors active in Asia, AVPN with over 600 diverse members across 33 countries enables collaborations between policymakers, family offices, foundations, and the private sectors to increase the impact and flow of capital deployed toward closing SDG gap in Asia. So, and essentially strengthening the ecosystem of impact investment. So network should be seen as the greatest asset that is built on a neutral convening platform for funders and resources providers to break down traditional silos and find synergies across sectors. Learn best practices from leading practitioners and also champion high impact but under-supported issues. So in other words, the network should be able to bring people closer together so that isolated stakeholders no longer recreate the wheels and also incite intended funding wasted. Instead, network help to scale impact by pooling resources and complementing expertise. So through network, we may be able to capture the needs and the ability by identifying each of the stakeholders' role. So in order to strengthen the ecosystem for impact investment, so this can be achieved through identifications of the right partner to collaborate by understanding each other's capabilities and strengths to reach impactful and meaningful results. So to be able to understand each of the stakeholders' role will, of course, is improve existing solutions to create a more efficient and scalable impact. So since the term multi-stakeholder collaborations often is not easy to achieve. So however, on top of all of this, a strong leadership and shared vision should be the key element to be able to get the meaningful scale of solutions based on the data needs. So furthermore, it's important to improve clarity around impact measurement and management framework and indicators. So impact investors sincerely want to know that their investment make a difference. So pioneering investors, by being committed to integrating impact measurement and management, can begin to build the case of investment in underserved regions and underproven solutions. So effective impact measurement and management can also have the additional benefit of flag social and environmental harm that their investment might cause. So through the years, Asian investors become more sophisticated in their impact journey. So we need to have opportunities to confidential structured meeting where investors can experiment with new approach, share their tools and experience, learn from peers and benefit from thought partnerships in order to advance their impact management practices and that of the sectors more broadly. So I think if we have the standardizations, it could also help the impact investors to be able to think about impact management and investment management simultaneously. So to sum up, one must approach impact as part of an integrated practices that also include financial dimensions that they are used to considering, such as like return, risk, time, and also liquidity for the businesses to be more sustainable and also achieving the investment goals to the right directions. So lastly, I'd like to close this with a final thought. So the pandemic has dramatically changed the world and most countries pose challenges toward the SDGs progress. However, this also calls attention to the need for greater collaborations among stakeholders and commitment in both activities and financing tools to guide all stakeholders on the directions and also target for Indonesia to achieve the 2030 agenda and also shall provide a unified framework to the advance of sustainability and the SDG among businesses. So once again, personally, and also to represent AVPN, the largest network of social investment active in Asia, we would like to say a hearty congratulations to the team involved in the public launch of the UNDP SDG Impact Standard. And we hope that the UNDP SDG Impact Standard can bring to life and also help our ecosystem to be more strategic, practical, and also bring the best solutions in the regions. Thank you.
Thank you, Ibu Dini, for the kind introduction on ecosystem strengthening for impact investment. Indeed, Indonesia's market has brought to the fore the need to have a management standards and authentication of practices. We now would like to call Fabienne, who will enlighten us on what is the SDG Impact Standards and what role can it play to enhance the value of your businesses. Fabienne, the floor is yours.
Thank you so much, and thank you everyone for having us today. And I'd just like to note also that Devahudi Chaudhary, who's our regional expert within the team for Asia Pacific, is with me today too. So thank you all very much for attending. I'm just going to pull up my screen, hopefully with the right presentation. There we go. So as we've heard today, we're going to go through a very high-level overview of the SDG Impact Standards and our journey to date with the standards. And what I would say to start with is, often there's a lot of focus on the word standards itself. And first and foremost, my view is that the SDG Impact Standards should be thought about firstly as really a resource guide to help organisations and enable and facilitate them to embed sustainability in their own decision making, to really position them and future-proof their businesses for the future and make a contribution both to operating sustainably as a whole, but also to contribute positively to the SDGs. So, obviously there's other aspects of the standards in terms of the assurance framework that sits behind it that really starts to build a more consistent approach and accepted way of looking at impact and integrating impact into decision making, and also to assess that and provide that external assurance. But first and foremost, I think the biggest benefit to start with the standards is just to look at them as a really useful guide to help a lot of businesses who are already trying to start this journey to actually accelerate their sustainability journey. So today we're going to go through firstly just a few concepts to level set, because as most of you know, this is a space where there's a lot of terminology and people use the terms differently. So we'll just start off with a couple of definitions in terms of how we use the term so that hopefully everyone's on the same page as we go through. Very quickly touch on the business and investment case. I think we've already talked a little bit about that. Then really the transition from where we are today to really embedding managing for impact into organisational and investment decision making, and how the SDG Impact Standards can help on that path. And then we're just going to spend a little bit of time talking about the self-assessment tool that we've developed for the standards, which is a useful tool that investors and organisations can use, and where we are in terms of the development of the assurance framework and the pathway from voluntary adoption and self-assessment to assurance in the future, and then finish with a call to action. So SDG Impact, as we've already heard, is a global initiative of the UNDP in its Sustainable Finance Hub, and it's interesting because it is 100% really focused on private sector activation to contributing towards sustainability and the SDGs. Historically, UNDP has tended to have much deeper relationships and focus on government, activation on the ground through community groups. But this initiative is really a recognition that to achieve the SDGs, we need the private sector, and we need to finance the SDGs. Behind every development activity is a need for financing, and that's really what this initiative has been brought together to focus on. As we heard, there's two streams of work. We've been developing the investor maps, which really map out the investable opportunity areas in markets that, you know, at that intersection of SDG need, policy priority and investor interest. And we're really looking to try and strengthen impact practice and embed managing for impact into how private sector businesses and investors make their decisions so that we can deepen impact. And that's what we're going to talk about today. So on that side, there's quite a lot going on in terms of what we've been developing. So we have the standards, 3 sets of standards targeted at different user groups, but all designed in the same way under the same umbrella. So for enterprises, for private equity funds and for bond issuers. Importantly, we also collaborated with OECD on a 4th set of standards for private sector partners of DAC member companies. So effectively development finance institutions and the like. And we see that as being really important, because when we're getting into that part where we're trying to deliver solutions where the gaps to the SDG are greatest, oftentimes that's where there's market failure. So the private sector isn't going to be able to solve that on their own. They're going to need to solve that by coming together with different types of capital, concessional capital, grant capital, and also with different partners than they may have considered in the past, and maybe also looking at their business models and increasingly at technology in terms of ways to reach underserved and unserved market segments. So really, you know, the standards sit there. Next to that, we've also developed an online training course, which is available that is self-directed and really goes through the mechanics of impact measurement and management in line with the standards. So very complementary and helpful for organisations that are looking to adopt the standards to actually undertake that course, which is available for free. And we've also been developing training on the SDG standards, as well as capacity building to actually train external trainers to lead training on the standards and train assurers, so that when we launch the assurance program, we have accredited assurers who can lead the engagements on the assurance side as well. The other important aspect of this work is that UNDP is a unique organisation and has the ability to influence discussion at lots of different levels. So while we're very focused in our team on the delivery of the maps and the standards and the associated capacity building and training, we also engage with our colleagues across UNDP in terms of taking some of what we're developing and learning into some of those policy dialogue discussions, either at a country level, but also through other mechanisms such as the G20 Sustainable Finance Working Group. So that really talks about what we've already talked about. So now on some of the definitions before we get into the details, so that we're all thinking about things in the same way. So first of all, sustainability. Sustainability and sustainable development are often used interchangeably, and really when we talk about sustainability, as in UNDP, we're really talking about development that meets the needs of the present without compromising the ability of future generations to meet their needs. So it has that external focus. This isn't about the organisation's performance per se. This is really at a holistic level, development that is sustainable, that enables everybody to meet their needs now and into the future. And the Sustainable Development Goals, of course, is the blueprint for how we can achieve a sustainable and inclusive future, agreed to by all the UN member states in 2015, effectively a taxonomy of all of the environmental, social and economic aspirations of the world that at a minimum we need to meet to be able to assure our common future and a prosperous and inclusive future. So as many of you will know and will, will be following and understand, this next decade is really considered to be extremely important in terms of putting us on the right path, especially from the perspective of climate change and getting that under control. But as we heard too, really dealing with the with the multi-crises and triple threats that we're currently experiencing as a result of the pandemic, the war in Ukraine, which has obviously had global implications for food, energy, and financial markets, as well as climate and all other aspects. The SDGs are really important in that they recognise the interdependence across environmental, social, and economic dimensions of well-being. And also because their underlying core tenet is those concepts around leaving no one behind and reaching those furthest behind first. So how can we actually really elevate and lift up the focus on reaching those underserved and unserved market segments as a matter of priority? Now, ESG, there's a lot of focus on ESG, and ESG as a term is used actually quite differently by different people. If you look at investment markets globally, the leading use of ESG in investment markets is around financial risk integration and management. So it's used as a financial risk tool and as a profit maximisation tool. So to understand and identify and respond to environmental, social and governance factors that may impact the financial performance of the investment or the organisation. And that's obviously a little bit different to what we've been talking about in terms of the definition of sustainability with that outward focus. And we'll come back to that in a little while. So impact, on the other hand, is really trying to actually think about the changes to aspects of well-being that are experienced by people and planet that are caused by the organisation. So rather than the world's impact on the organisation, we're focused on the organisation's impact or the investment's impact on the world. And impacts can be positive or negative, intended or unintended, direct or indirect, and vary obviously in how much they contribute or otherwise to the SDGs. And I think that's one of the aspects that is apparent in markets at the moment, that a lot of organisations are using the SDGs and really like using the 17 coloured tiles in their reporting, but oftentimes the use and alignment to business is really at a very very high level in terms of I'm doing something in education, therefore I'm aligned with the SDG for education. But it's not necessarily drilling down into whether or not the organisation is delivering solutions that are reaching segments of the market that are performing at a level which is below the current SDG threshold. And that's something in the standards that we really try to unlock. It's not that it's bad if organisations are providing benefits to customers and people above the threshold, but it's not necessarily helping us achieve the SDGs in really targeting those areas where performance is below the thresholds as indicated by the SDG targets. So again, with impact, oftentimes impact is thought about in terms that we set some impact goals and they lead to intended impacts. But of course, everything we do has an impact, whether it's positive or negative, direct or indirect, expected or unexpected. So impact is far more holistic in terms of all of our activities and decisions lead to both intended and unintended impacts. And we need to be thinking about those holistically in terms of ensuring that as we manage impact, that we're managing for net positive impact and taking into account negative impacts that we may be having in other parts of the business, but also in pursuit of those positive intended impacts if our way of actually going about achieving those positive intended impacts is having negative impacts elsewhere in the system. So when we think about the standards and why we've developed them. Obviously, we haven't developed them just for the sake of it. We're really responding to what we see as a gap. That current practice and what we're doing isn't going to get us to achieving the SDGs or on a sustainable path at the rate we need it to actually achieve our collective goals. So when we look at the gap between current practice, which is largely centred around ESG strategies and impact, I think there's a couple of things that are really important to think about and look at. Firstly, with ESG versus impact, what's the underlying objective? So if your objective is to maximise financial performance of the organisation or manage financial risks, that's going to lead to you thinking about information and filtering in or out information for decision making in a different way to if your goal is to contribute positively to sustainable development outcomes. Increasingly, because of where we find ourselves and the tipping points that we're really facing in terms of climate and other social systems, potentially trying to apply a financial materiality lens to manage financial risk may actually be leaving out important considerations that may already be impacting financial performance, but we don't recognise it yet, or will impact financial performance in the future. So I think that increasingly there's going to be a need to think more broadly about sustainability and impacts to actually even manage financial risks better. The second issue related to the objective is, what do we do with that information as a response once we've collected it? So as an investor, if your desire is to manage financial risk and maximise financial performance, perhaps on the identification of an ESG risk, you seek a higher return for that investment to compensate for the additional risk. Now that's, that's obviously a signal, a weaker signal, but a different response to an investor who's looking to align their investments with positive impacts or with contributing to the sustainable development goals. There you might actually be looking to select a different investment or actively engage with the company around changing practices to reduce negative impacts. So, between the two approaches, you get different responses, even though a lot of the times you're looking at very similar things. I think that the other aspect that really differentiates currently ESG to impact is the metrics that we use and how we measure performance. So on the ESG side, we're usually measuring efforts or activities and outputs, versus on the impact side, results, so outcomes and impacts. But I think that is less of a difference between ESG and impact and more of a current shortcoming of ESG, which I think will need to be addressed over coming years to ensure that the metrics we're using on the ESG side are indicative of the outcomes we're trying to focus in on and the risks and opportunities that we're focusing in on, where, I think that there are deficiencies on the efforts side. So, it is something that differentiates the two responses now, but the two approaches now, but I think that that's an area where there should be convergence over time. I think the other important thing to think about from the perspective of ESG and impact is that ESG is often treated within organisations as collecting data to report out externally. And obviously on the impact side, what we're really interested in doing is using that data to make better decisions and deepen and broaden the impact that we're having through the use of that capital. And I just want to check. Okay, that's not for me. So now just in terms of why the SDGs and sustainability matter, and this is a lovely quote from actually work that was done by Values 20 or V20, a group that's operating on the sidelines of the G20. So, as I said at the start, this SDG Impact has been set up really recognising that we need the contributions of the private sector to achieve the SDGs. But as much as the SDGs need the private sector needs sustainability and the SDGs too, in terms of providing an environment where businesses can continue to thrive and survive in the future. And that obviously has a knock-on impact in terms of the performance of investment portfolios. That really to continue to generate profit and to operate, you know, in a reasonably stable environment, we really need to stabilise and start regenerating our social and environmental and economic systems. So that's you know, that's really a recognition of that. And I really like this quote from the previous Secretary General of the UN, that we're the first generation to be able to end poverty and the last generation that can take steps to avoid the worst impacts of climate change. And I think, you know, that's really where, you know, where in terms of this decade, we sit in terms of the need to move fast and find different ways of doing things that put us on a more sustainable path. I think this is really you know, telling that, you know, the World Economic Forum cites, you know, COVID-19, which is ostensibly a health crisis, and climate action failure, an environmental crisis, as the two most likely long-term risks to the world economy. And you know, with climate change having, climate action failure having potentially the most impactful long-term risk. So, you know, the numbers around that are, you know, in the vicinity of 10 to 20% of GDP per annum wiped out by rising temperatures. That's, I think, 8 to 17 trillion US dollars a year. You know, 50% of the world's GDP relies on high functioning ecosystem services. You know, there's real, you know, there's real economic costs to not actually putting us on a more sustainable trajectory. And, you know, around the world, we're seeing, you know, a lot of these just amazing, you know, weather events with enormous economic costs and disruption to, you know, to businesses and to life, really, in terms of communities. So from an investor perspective, why invest in the SDGs, you know, in terms of, I guess, a little bit more honing in on that relative to that macro case. I think for institutional investors who are now, you know, very, very large, you know, relative to the economies they're operating in, you know, this concept of universal ownership, that as, you know, large investors can't actually avoid the market. So, you know, so they really need to be contributing to a positive environment overall to continue to have stable and positive investment opportunities into the future. There's also, you know, the growing research around the financial outperformance of companies that manage ESG issues well. Now, there's different research there depending on, you know, where you read it. I think some of the research that has really tried to actually pull out samples and concentrate on companies that have integrated sustainability very much in terms of their core purpose and the philosophy of what they do, versus a lot of organisations that have, you know, jumped on the bandwagon later. You tend to get stronger results in terms of performance, outperformance there than with a broader set. But overall, you know, you know, I think that there is increasing levels of evidence that managing these risks is important. There's obviously growing client demand, and in some parts of the world, an evolving view of fiduciary duty. So, you know, in some parts of the world, and historically, the view has been, you know, that fund managers' fiduciary duty is to maximise, the financial returns to their investors, but there's an increasing sort of group really starting to look at that in terms of, if we don't manage these sustainability risks and contribute to outcomes that are improving sustainability, we're actually going to be contributing to reduced performance in the future. So that's starting to impact on the discussion around fiduciary duty in different parts of the world at different rates. I thought this was a really interesting article that came out late last year, that in terms of, from an investment perspective, just the impact that investors can have in this space. That when you look at the wealthiest cohorts in terms of the population, that the vast majority of their emissions, when you're looking at the energy transition, the vast majority of their emissions are actually coming from their investments, not from their consumption. So changing behaviours and patterns and what they're looking for in their investments can have a really big impact overall. From a business perspective, the business case for sustainability in the SDGs, I think, is becoming increasingly strong and really important in terms of making organisations future fit for the world that we're leaning into. So sustainability is becoming a really major business disruptor, but also a competitive differentiator, and that creates both risks and opportunities, as we can see here. And this list actually came from a Harvard Business Review article about a decade ago. Okay. So when we think about private sector contributions to the 2030 agenda, we tend to talk about them in two main categories. The first is that overall there's an opportunity for businesses to contribute by operating responsibly and sustainably, and avoiding or significantly reducing negative impacts that business and investment activities are having on people and the planet. So, reducing pollution, reducing emissions, etc. Other elements there. Then the other contribution is on the positive side, to really look at ways that the private sector can benefit stakeholders and contribute to SDG solutions. So how can the private sector develop new products and services that benefit stakeholders, but with, as I mentioned earlier, and at least some focus and a specific focus on unserved and underserved markets, that helps to create new customers and market opportunities and accelerate innovation, and actually contribute to increasing equality and reducing inequality as well at the same time. So, in terms of that focus, I'm really trying to embed this into how organisations and investors make decisions. One of the big shifts in focus is really around trying to shift the focus to internal management and decision making around the use of impact data from and more of an external reporting focus. And, external reporting and all of the work that's going on to, develop the ISSB and other frameworks, and, using data to create ESG ratings that investors can use in their decision making is all really important. So, this sustainability puzzle is not a one thing, one answer for everything. It's a lot of things that need to happen, and that's part of what needs to happen. But at the same time, our view is that there needs to be a really strong focus on how we embed sustainability, the SDGs, and managing for impact in how organisations and investors make their decisions. So before they report out, how do they actually use impact data to change what they're doing in the future? So at the moment, more of the focus sometimes is on collecting information to report what organisations are already doing differently, rather than collecting information to use it strategically to actually drive different decision making and make different decisions that increase the impact organisations and investors can have for the future. So, and obviously one of the big differences between external reporting and internal decision-making is that internal decision-making is forward-looking in terms of influencing future decisions, whereas typically external reporting is focused on the past. I think that one of the other aspects of between those two approaches too is that what we want on the internal management side is flexibility and innovation and really enabling and facilitating the private sector to do what it does best, which is to be creative, nimble, agile and innovative, whereas external reporting is often about, consolidating approaches to improve comparability and make it easier for external users of that information to compare and contrast and make decisions between different options. So, our view is both very important, and our focus is really on that internal decision making as one of the areas where there was more of a gap than on the external reporting side. So here, to achieve the SDGs and put the world on a more sustainable and equitable path, our view is, and all of the thinking behind the standards is, we need a transformational shift in mindset around management decision making. And that's really, as we heard in the opening remarks, to really drive that shift where we move from thinking about sustainability in the SDGs as an add-on to what business gets done, to really using it as a filter through which all business is done, and really moving from that focus on financial risk management to value creation and innovation, which ultimately will support the ongoing resilience, sustainability and financial performance of organisations into the future. So now we hit the SDG Impact Standards themselves. I've already mentioned, the umbrella of standards. So they've all been, part of our thinking with the standards was to create a shared language and approach for sustainability and managing for impact across different actors in the system, that we need better mechanisms to enable investors and enterprises and different providers of capital to come together around shared solutions. We didn't want to duplicate and replicate the good work of others. So the standards have really been designed as an overarching sense-making and decision-making framework that helps organisations look at what's available through the resources and tools and frameworks that already exist, and make choices between them, whether they're ones that are available today or ones that get developed in the future. And also to identify and fill gaps that, in our view, were potentially undermining progress towards sustainability and achievement of the SDGs. So in the standards themselves, we've focused, end to end, from strategy through management approach, through transparency and governance practices, and really tried to, focus in on areas that that current high-level principles and approaches were not focusing on so much. And where we found the biggest gaps were really around the strategic focus and also governance, embedding impact and sustainability in the the existing governance mechanisms of organisations. So the standards, this diagram really tries to show how the standards work in relation to everything else that exists in the ecosystem. So the grey box in the middle is the standards, and several frameworks are core, and we lean and push out to in terms of the standards. So integrating the UN Guiding Principles for Business and Human Rights, the UNGC's 10 principles, the UN Women's Empowerment Principles, as a framework, the Sustainable Development Goals, the impact management projects, 5 dimensions of impact, and ABC impact classifications as a shared language around how to describe impacts and categorize them. Other frameworks. More recently, in November, the UN also released recommendations from a high-level expert group around net zero pledges. That's another piece of work that can actually be easily integrated into the standards. So then we're not prescriptive about the tools and the reporting frameworks that users of the standards use. What we really do is actually lay out the decision-making framework to help organisations make the right decisions about what works best for them in their context. Last year, one of the things that we did was actually based on feedback as people started to use the standards, we actually reorganised the entry point of the standards around 12 actions. So for the enterprise standards, PE and bond issuer standards, there's now a diagram like this that organises the standards and practice indicators around these 12 actions. We've also organised the self-assessment tool by the 12 actions, and the assurance framework will be organised by these 12 actions as well. Those 12 actions are organised around the 4 main themes, the end-to-end themes around strategy, management approach, transparency, and governance. So, and this just shows, I won't go through them in detail, but for the others as well. So, when we look at the 12 actions, for strategy, what we're seeing here is, to start with that commitment and really that change in mindset that we're really embedding and thinking about sustainability and the SDGs and making that positive contribution at a really high level in terms of the purpose of the organisation. That we think more broadly about the sustainability context to really identify the areas that are important and where the organisation can make the biggest impact. So that's sort of taking the existing materiality assessment that a lot of organisations do and making sure that it's taking a somewhat broader view and looking around corners, which can be positive both from the perspective of anticipating future risks earlier, but also in terms of identifying pivot opportunities and opportunities for innovation to lean into these trends as well. And then backing that up with setting ambitious goals and really, reflecting that what is learned through steps 1 and 2 into strategy and purpose for the organisation. Then really looking at how we then translate that through the management approach of the organisation. How do we align the organisation so that it can best manage impact for the future and really, not have, align incentives and everything else so that we get the outcomes we want and that we can actually achieve the goals that we've set? How do we develop our internal IMM or impact measurement and management framework and then put that into action in terms of how we make decisions, and importantly, how we learn from that over time and continuously improve and have feedback loops back into our strategy and our management practices to continuously improve and deepen the impact that we can have. How do we actually provide information through our reporting to other users of the information and integrate that through our governance practices, and importantly, set the tone from the top in terms of sending the right messages. So in terms of using the standards, the easiest way to start using the standards really is to go to the self-assessment tool that is organised by the business actions. There's some questions for each business action which are aligned with the practice indicators. You can see then the practice indicators that are relevant for that business action, and then you can use the tool to actually think about, whether or not you're already undertaking actions in that area, whether, where the gaps are and what you might be able to do to fill those gaps. The self-assessment tool we're currently updating, and we will include in the self-assessment tool also, make it clear where there are guidance notes in the guidance documents for the standards for each of the business actions, which definitions are relevant, and we will also provide mappings to other core frameworks as well. This will also be where we capture the minimum evidence requirements and potential evidence or sources for assurance when that's up and running as well. So now I'd like to hand over to Cindy Kalondom from our Indonesia country office, who's going to take us actually through an example of an Indonesian fund that's been working with the standards. So Cindy, there she is. Cindy, over to you.
Yes, thank you so much, Fabian, and good afternoon, colleagues. Thank you so much for allowing me the time to just briefly explain about our engagement in the UNDP Indonesia country office with the private venture capital fund that we're working here today. It's called Indonesia Impact Fund, and one of the reasons why I think SDG Impact Standards have really helped in this particular scenario is because this is sort of like the first pilot fund that we've been working with. And in terms of strategizing, coordination, and development of an impact framework, we really needed something concrete and something that could be standardized across all different kinds of funds and even trickle down to the portfolio management. And so we took the SDG Impact Fund, SDG Impact Standards, and we sort of integrated it into a more fund level and also portfolio level. And so what we've done, if you see on the slide from Fabienne, we first started with the strategic intent. So we talked to our fund managers and we discussed on what kind of impact thesis that they want to deliver in terms of their strategy. We helped them set the portfolio level impact goals, and we also co-developed a few indicators that could be reached from portfolio level as well as to reporting level as well. And then in terms of the management approach, if you see the box that's highlighted, with our support, we also established a pre-screening criteria that's aligned with the impact thesis that we've developed with the fund manager as well as the goals. And the pre-screening criteria just helps us to better enable and also build capacity of the fund manager in terms of identifying not only financially viable, but also impactful potential investees to be pipelined into the fund itself. We also conducted an ex-ante impact assessment. So based on our own process, we've done interviews and also focus group discussions with the potential investees and trying to figure out what are the potential impacts that they're making and the existing ones as well, and the potential ones as well. And we've also developed the impact action plan for the investees once they have gone through the UNDP impact review. So really the SDG impact standards have really tried to help us map how we are going to engage with private sector, not only from a venture capital fund level, but also, again, it trickles down to the portfolio level when we're working with investees. And this is really just helping us sort of standardize our approach and also our management. If such in case in the future we work with other funds or we work with private sector that's interested in sort of integrating sustainability SDG impact standards into their management approach. So perhaps I can share until there. But thank you so much. Back to you, Fabienne.
Thanks, Cindy. That was fantastic. And now, as another example of how organisations are working with the standards, Devahudi is going to talk a little bit about our experience with a working group of Malaysian organisations. So, Devahudi, over to you.
Thanks, Fab. And hello, everyone. So the Malaysia working group is quite an interesting example because well, what we did was that we had, run an accelerator, which is another product and service that UNDP offers, which is the Impact Venture Accelerator Program that was run in Malaysia that took a cohort of about, 25 to 30 enterprises that are working in the impact space, but also with strong commercials through an acceleration process. And we took them through an orientation on the standards, and we found a few volunteers who wanted to look at the standards in a more in-depth manner. And what you see here are a range of organizations that we worked with over a course of a year and a half. We had an enterprise that was working on waste management, to one that was working on education technology. There was yet another one working on biodiversity and river conservation, mental health, upskilling. So you see really a sort of a mix sort of different sort of impact focus coming together, but looking at a standardized way of how they want to embed impact at the center of the business. How do they want to look at strategy? So what you see here is essentially the cycle that they went through when they embarked on this journey with us, where we tried to take them through how they can build their own awareness on how they're looking at the strategy, management approach, transparency, and governance related practices. And then, look at how they're sort of going through this whole experimentation process by using some of the tools and resources that we offered, where they were able to map their performance on some of these practices, very clearly differentiating, as Fab has mentioned, that our standards are more around management decision-making and not really reporting. So really looking at that piece, which often gets ignored, to then looking at how they want to adopt. So coming up with very customized roadmaps for each of these organizations, and now slowly moving towards a path where they're looking at timelines on how much time they need in order for them to adhere to each of the practices that come together in the standards. And hopefully in the future, once they're ready, they can also look at an assurance process that Fab will quickly take us through. So this was our example from Malaysia, and we also look forward to sort of do something similar and helping enterprises and investors in Indonesia go through similar journeys. Fab, back to you.
Thanks, Devahudi. That's fantastic. And then here, just another example at the other end of the spectrum. So, a very large company, Lenovo, who make PCs and various other things. Strong commitment to sustainability, but have really, feel that the SDG Impact Standards can actually add value to their work, really by providing that overarching framework. They've, I think one of the things that's really interesting here is that they've recognised through working with us on the standards that the standards provide a tool to help them enhance their ESG programs to really shift from that focus on activities to impact, and also as a way to bring together lots of different ESG programs they have across the business into a comprehensive business management system across the board. So just very quickly there, an example at a different sort of like end of the spectrum from a much larger organisation. So, as I've said, I think, in the first instance, the standards are really, helpful in terms of just the, internal guidance to help organisations on their own sustainability journey, and to really give organisations the confidence that they're thinking about sustainability, the SDGs and impact in a systematic and holistic way, and tracking that through in terms of how they integrate that into their business decision making. A lot of organisations are very interested in the assurance framework and the SDG Impact Seal, but we really see this as being an evolution that getting used to the standards, starting to work with them, and plotting a path towards assurance is important as organisations who are used to third-party audits or assurance will know. It's oftentimes not a matter of whether you're doing something or not. It's often a case of whether or not you're documenting and collecting the information that you can show someone else outside the company that you're doing it. And that's really, I think, part of the journey to assurance. The assurance framework we're really looking to, lift, I guess, the focus on assurance to really provide a more transparency around the underlying requirements and provide a consistent open source framework that people can use to assess their their adoption of the SDG Impact Standards. One thing I haven't mentioned is that the standards are very aspirational and set a very high bar, because what we really wanted to do was show that North Star, that if we actually want a shot at creating that sustainable future and achieving the SDGs, what's required to get there, and to give people that sense of direction in terms of where we're going and where we need to get to. The assurance framework, on the other hand, will set minimum evidence requirements at a lower level, but with the expectation that over time you need to be continuously improving to maintain the seal in line with the SDG Impact Standards, because our theory of change is that our current practices aren't going to get us to where we need to get to. And what we need to do is encourage as many organisations onto the on-ramp as possible and to continuously improve over time. So as I mentioned at the start, we're about to start our assurance pilot. That's going to be running from probably April until the middle of the year. Actually, immediately after this call, I'm spending my second lot of 4-hour sessions training assurers on the pilot assurers on the standards in readiness for undertaking the pilot. And this is just a really quick sneak peek at a draft of how we will be providing the information for assurance at the practice indicator level. So here I've selected a practice indicator 2.3.2, which is really around data, and recognising that we don't start out with perfect data. In fact, we never achieve perfect data. And what I wanted to show here was that the focus in the assurance framework isn't around those isn't necessarily around, those objective measures like, I have a policy, or, things that, you might be more used to seeing in some of these frameworks. The focus here is really on the evolution. How are you moving from one, from a lower level of use of impact data to a higher level and more primary data? How are you using that information to change, to actually make decisions? And can you show that you are systematically integrating this into how the organisation operates? So finally, lots of resources available on our website. The standards, the guidance notes, the self-assessment tools are all downloadable. The Duke online training course is available online, and the links are there too to also the version that's available in Indonesia Bahasa, thanks to our strategic partner, the Centre for Impact Investing and Practices. We're introducing, masterclasses and training on the standards. We're building capacity by having a train the trainer program to train and accredit external trainers to lead training on the standards, and also we'll be training assurers to lead assurance when that's up and running as well. And, finally, just to leave you with some next steps around, ways to actually engage with the standards, obviously training for organisations and funds that are looking to adopt the standards, embedding the standards into investment activation, and in particular, aligning the standards with investment opportunities around the areas that are identified in the SDG investor maps, and the work that was done last year, working with government and private sector partners to improve the ecosystem and really, create the level playing field and the right incentives to encourage people on this journey, and obviously moving towards assurance once we launch that later in the year. So thank you, and I'll hand back now for some questions, I guess. Thank you.
Yes, thank you very much, Fabian and Michelle, for kindly enlightening us on what is SDG Impact Standards and also walking us through on basic understanding of what impact management and measurement is. Now, colleagues, we are now arriving at the Q&A session. Should you have any concerns, comments, or question that you'd like us to answer or you'd like us to address, please don't hesitate to raise your hand if you would like to articulate it verbally, or if not, please don't hesitate to drop your comments in the Q&A box. Yes.
Exhausted all questions.
Yes, I guess previously a couple of participants have raised their question in the Q&A box, and I guess Pishan Bai from UNDP Mongolia asked that would it be possible to share any concrete success case related to private financing towards SDG with substantial impact? Perhaps you'd like to answer that, Fabian, and I know that Devahuti has already addressed it.
Yeah, I think maybe in terms of some of the work we've been doing in the post-map activation activities, Devahuti, do you want to mention any of those examples in particular?
Sure, Fab. So, and thank you for the question. I think it's an interesting one because the proof really lies in the pudding. So we do want to see who are these enterprises that are active in this space. So for us at UNDP and even for our collaborators, and we're always looking for partnerships, we are constantly looking at how do we identify these enterprises that we've in the investment opportunity areas that we've identified through our SDG investor maps. Indonesia has a very, very solid map, and I would urge everyone here to sort of take a look at it. So we are now embarking on a series of these activities, which will look at enterprise activation, which will look at, sort of matchmaking if possible, and depending upon the kind of partners we're able to mobilize. So a lot of that work will go towards, creating that evidence or to show traction that indeed capital flowing into SDGs is possible. Indeed, it is possible for us to look at impact as well as commercial returns. So sustainability, really looking at it holistically. So those are some of the things we believe in, and we are now continuously trying to do, and is going to be a big part of our focus in Indonesia, for instance. And the reason why we chose this time to also do this webinar, because at this point where you really start looking at scale, really start this enterprise identification work, it's also important that all of that impact narrative is authenticated, and the standards really help scaffold that entire conversation with something very meaningful and helps us manage for impact better. So I've provided a few links where some of these enterprises that have been identified or some of these investment opportunities that have been identified can easily be seen, including some of the work that our anchor partners, Center for Impact Investing and Practices, have been doing in the region, looking at very Asia-specific examples. So all of it is out there. And plus, if you have any further questions, please do reach out to us. We'll be very happy to sort of have that conversation.
And there was a question, I'm not sure if it's for enterprises or funds, so I'll answer it as if it's enterprises. And Priscilla, who asked the question, can correct me if I'm wrong. She's asking, what are the other tools and resources that, she can use to advise her clients. And there's in the guidance documents that we're provided for the standards, we actually provide sections around all of the business actions that list out a lot of the resources and frameworks and tools that are available. I think for enterprises, one of the things, because we're one of the things we hear regularly is just that, how do we do that materiality assessment in a way that's better than the way that it currently gets done, in terms of just being that sort of bottom-up focus, focusing on our existing clients rather than really looking out and thinking about things from a sustainability perspective. I would say there that a really useful tool is the SDG Action Manager that was developed by BLAB and UNGC. It really helps organisations to identify, at the SDG areas that are probably most relevant for their sectors. If you're a financial institution, the tools and resources that UNEP FI have developed for financial institutions, are really strong again in terms of helping effectively an aggregator, portfolio manager, identify the areas that are probably likely to be most important for them. The global the GISD, Global Investors for Sustainable Development. I'm very bad at acronyms, I'm sorry. But the GISD network of global institutional investors are developing additional resources for investors. So again, really looking at ways to actually identify the areas that are most likely to be important on a sector-based level. They've actually mapped out, an approach which is very aligned with the SDG Impact Standards as well. The GRI are actually starting to enhance their reporting framework by adding in to their framework sector standards. So again, really honing in on the things that are relevant at a sector level. So there's lots of different tools and frameworks available. And we try and highlight, as many of those as possible in the guidance. So I'd take a look there and hopefully that's of help. But I think it's an area where there's more and more tools that are getting developed over time. So I think the important thing is always having that sort of eye to what's new. It's a very dynamic space, and I think we're going to get better tools and better resources as there's more investment and attention in this space.
Yes, thank you, Fabian. Do you have any more questions or comments, or I think, oh yeah, yes, you're welcome. I think Priscilla just
thanks, Priscilla.
Thank you. Yeah. Okay. Do you have any more comments, questions, or just your general thoughts on the session?
I think one of the other things we often hear is, where do I start? And do I have to do it all? And I think, well, firstly, in the self-assessment tool, there's a way of actually very simply thinking about things in terms of, or areas that might have a bigger impact and that might be easier to start with. And I always say the most important step is the first step. So just make a start and the rest will come from there. It's a journey, and it's not about trying to do everything at once. It's about improving over time and continuous improvement. So, pick the areas that you think you'll have, the most ability to implement and will make the biggest difference, in terms of impact, but also to the business.
And also as a follow-up to what Fab just mentioned, Anisa will be sending out an email with all the resources that we have created. A lot of this is public assets. I mean, that's the idea. We really want to scale this up. So we have not just the standards, but several other resources to support the adoption of the standards, including self-assessment tools, including glossaries of terms, to demystify what a lot of this jargon that we keep throwing around, and including some of the resources that Fab said, in order to sort of help you through each of the steps. So please do take a look at all of that. We would be happy to, like I said, support you in that journey. And we are also building a cadre of trainers, within and without, outside of UNDP that are easily available for you to access, should you require that level of capacity building within your organizations. So happy to discuss, as you start your journey and the kind of support that you require.
Yes. Thank you, Devahuti, Fabian. If there is no more questions or comments from our esteemed participants, I guess we are now approaching towards the end of the webinar. I would like to extend my sincere appreciation to Fabian, Devahuti, Cindy, and then Ibu Dini, and also Ibu Sujala for kindly allocating your precious time for this webinar and enlightening us on the SDG Impact Standards and also the IMM. And I'd like to recall the call to action, which has just been reiterated again by Fabian and also Devahuti, that if your businesses or funds are interested to adopt the standard, or we'd be glad to be your partner in holding these trainings, or we'd be glad to be your partner generally to walk you through. If you have any confusion on where to start, just hit us on emails. And then we also have many resources which have been made available as public assets, like SDG Investor Map Indonesia, and we'd be excited to work with you should you want to explore further on that. And allow me to conclude by extending my warmest appreciation to everyone who have spared their time to come and also join in this webinar. We will be in touch with you with all the relevant materials and resources, and I hope you have a nice day. Yes.
Thank you.
Thank you very much, everyone.
Thank you.